What's up everyone, my name is Anthony, and in this video I want to do some updates on SPY and QQQ as well as some individual stock picks and discuss what the price projections are for the short term and as well as the medium term time frames. So first we'll start off with the S&P 500. So this is the major index that we're trading, and I do want to point out that we are coming up for a very extended X wave, but nothing has changed about the actual structure itself. We are still working on this kind of WXY structure downwards, and because it has gone up to these decent extension levels, we could label this as a flat, but for now it doesn't really matter what we label it as long as we have that last leg of downside, which is what I'm expecting. So I actually want to bring up the internal subdivision of this X wave. So that is the main focus of this video, is just to kind of emphasize that this move is still corrective, and even if we come up to these upper retracement levels as we've done so over the past couple trading days, it doesn't change the fact that we'll still have a leg of downside now. So just to zoom out a little bit and explain what's going on, we have the top of the wave 5s over here, and then we worked on a broader scale correction. So we have a WXY structure, and this W wave form your WXY, and then this X wave is similarly forming a WXY. So before we get into the details of the subdivision, I want to bring up the time analysis. So over here, we take the length of this W wave right here. So we're taking the length of that, and then we're seeing where the X wave lines up. So as you can see, we're right about at that 0.618 extension of this W wave. So basically, this X wave so far is right about to hit 61.8% of the time it takes for the W wave, and that is a very common area for X waves to stop. And you can further dive down to that on smaller time frames, which is what I'll do. Of course, I don't like basing trades off time, but when you combine this with the internal subdivision of this X wave, I think we are very likely to get a reversal over the next couple of days or so. So let's just take away that, and I'll zoom in on the X wave. So to do that, we'll go down to the 5-minute time frame. So over here, I want to break down this X wave right here. So this entire X wave, and as you can see, this forms your WXY structure, and this W wave right here forms your three-legged ABC to the upside, and this X wave similarly forms a kind of ABC or WXY structure to the downside. And then now this is what has been causing a lot of trouble for the trades recently. So this Y leg of this WXY structure has subdivided into this ABC, and this ABC, each individual leg has subdivided into an impulsive structure, which is why the indexes have been able to move up a lot. And if you look very closely at these impulsive structures, so this A wave right here and this C wave right here, as part of an ABC corrective structure, those individual components have subdivided. So over here, just for example, this A wave forms a wave 1 up, 2 down, 3 up, 4 down, and then a 5 up. And then similarly, you have that gap down for the wave B, and then you have a 1 up, 2 down, 3 up, 4 down, and then a 5 up. And just for instance, you can actually treat this as just a regular impulse, but it's a very minor degree impulse. And this doesn't change the fact that we're coming up for a corrective structure. But just keep in mind that corrective structures do have impulses within them. And because this one is so clearly subdivided, that's what allows indexes to have gone so much up, but it doesn't change the fact that we're going to come down for a leg of downside. So for example, over here, we take the length of this wave 1 around there, and then we drag it to the bottom of wave 4. And as you can see, we're interacting perfectly with these wave 1 extensions. So the 0.786, which is a potential stopping zone for these wave 5s, is already reacting to that area right here. We're rejecting off of it and kind of pushing downwards, and we closed pretty much right exactly at that level. So at this point, in terms of narrowing it down to the very small minor subdivision, so this is like a whole 2 degrees down from this X wave, which just means that we're kind of narrowing it down into the minute by minute subdivision. You can see that we are interacting with these targets right here. So when you combine this subdivision alongside the time extensions and just with analysis of other stocks, which I'll do just in a second, we can pretty much see, I can say very high confidence that we are going to come down for this second leg of downside over here. And although it does suck that we have moved up so much, so just to zoom out, we are moving pretty much past the 88.6% retracement level of this W wave, and that to me indicates that we're in a flat correction just because we're kind of retesting this high up here. I still think that we're going to come down pretty harshly. So the thing is, if we're in a flat correction, so a flat just pretty much means, let me zoom out a little bit. So you come up over here, so we move down here, so a 3-legged structure downwards, and then we have a 3-legged structure upwards, and then a flat ends with an impulse downwards, so a 1, 2, 3, 4, 5, and that's what likely you will see. And of course, target areas can be anywhere from the bottom of this W wave all the way down to some further extensions, which I'll calculate once we do actually start the downside move, which I do anticipate happening over the next day or so, a couple of days or so. So pretty soon, I do expect to see some major downside to the indexes. So in terms of that downside move, we're still getting that. And even if we're in a WXY, so a non-flat correction, which is still a possibility right here, then you could get just a three-legged move downwards. And there's nothing different about the downside momentum. They're both downside moves, but it's just a three-legged move versus a five-legged move. And I will probably post in the Discord as soon as I can when I do see the structure of this downside move. So yeah, just in terms of analyzing also this internal WXY subdivision within this X wave, you can get some extension levels, and we're actually at pretty normal levels for this extension right here. So WXY, as you can see, we're right about between the 1.272 and the 1.414 areas, and that is a very common expected zone for that Y leg to go to. So in terms of just wave theory and dividing these individual subdivisions, nothing weird has happened yet. It's still in accordance with everything that we've mentioned in the same analysis as before. It just sucks out a little bit that you come up to these higher extension levels and retracement levels, but that is part of the wave theory, and it is allowed to do that, and it's not that uncommon for it to do so. But I just want to emphasize that we are going to come down for this leg of downside, and that's what I've been looking for to trade this entire time. So, and we can confirm this with QQQ as well. It's the exact same wave count. So over here we have a W leg down and then an X leg up, and then we're going to come down for a Y leg in the future. And just like in the S&P 500, we have a WXY subdivision here, and then a WXY subdivision up here. And once again, this WXY subdivision is right between the 1.272 and 1.414 extension levels, which is a very common area for these Y legs of WXYs. And in terms of subdividing, so QQQ actually is more of a textbook X wave. So right here, you see we're rejecting right off the 0.786 retracement zone of this W wave, and that is pretty much a very common area of stopping for this X wave. So if you zoom out to this rejection zone right here, we have tried to push above it and then closed and sold off under it. So that's exactly what I'm looking for. In terms of QQQ, this looks good to me. I do not see a flat correction going on here, which makes me think that SPY is not doing a flat correction. And the main reason why I'm actually kind of hoping that we're not in a flat correction versus a WXY is because you can actually get pretty greedy with the downside targets for a WXY structure. As you can see here, just for example, this WXY is pushing up to the 1.272 to 1.414 extensions. So by that logic, we can apply that to SPY's downside momentum. So over here, we have the length of the W, and then let's say we did actually top out right here, right around 452. So that means you can actually target the exact same zone. So right around the 1.272 to 1.414. And as you can see, that would bring some very significant downside to the indexes. So that's almost a, an 8% drop. So that's a lot of downside to be caused if we do come down to these lower extensions. Of course, I don't think I will be targeting that specifically. I'm just first looking for the downside move. And as you get the actual downside move, then you can further subdivide and get the exact retracement levels. But even just the one-to-one is still a 6% downside move. So there's a lot of potential harm to the indexes that could happen in the future. And that's what I'm looking to target with the trades. So just in terms of the QQQ, this looks like a WXY. It looks good to me. It looks good to go. And nothing is so far like out of the ordinary. In terms of this ABC internal subdivision, we are also at the 0.618 and 0.786 extensions of that A wave. And that's a very common stopping area for C waves as well. So in terms of just textbook wave theory, things are looking good. I didn't expect it to come up this far in terms of SPY, in terms of these retracement levels. I did not expect it to go all the way past the 0.786 and 0.86 retracement zones, but because we did, that indicates that we could be in a flat for this index. But either way, you're going to still get that downside move. So in terms of VIX, we are pretty low. We're at 15.5, and I do want to mention that VIX is actually looking to confirm the analysis on the markets. So over here, I want to point out this red dotted trend line, which as you can see, has been a previous area of strong support. So over here, we tried to break past it. Over here, we tried to break past it, and we ultimately just bounced right above it. So, and at this point, we're right at that zone. So that correlates. In addition, when you add up the time analysis for SPY, the internal subdivisions and the levels, along with just a lot of other indicators and individual stocks, which I'll talk about just right now, the indices are very likely to reverse now. So one stock I want to bring up is Salesforce. So this is CRM, and this is a very a pretty good indicator of the markets because it does have some share in the S&P 500. So we do have an A, B, C, D, E, a parallel channel downwards, and then after you have this parallel channel, you have an impulsive structure upwards. So this is a very clear impulse. So you have a wave 1 up, wave 2 down, wave 3 up, wave 4 down, and then this wave 5 is the textbook definition of a diagonal. And this is what I really like to see because it allows you to get a clear sense of what's going on. So over here, if you subdivide this diagonal, you have a wave 1 up, wave 2 down, wave 3 up, wave 4 down, wave 5 up, and that forms your wave 5. And we're actually consistently rejecting off this upper trend line. And I would expect to sell pretty harshly after we reject here. So if we do have that sell off, this will be likely associated with downside of the markets as well. And the thing of ending diagonals, the reason why I bring up this example is because it's really easy to see the stopping area of ending diagonals and that wave 5. So after this rejection here, you would expect this stock to sell off pretty harshly, and that would correlate with downside in the indexes as well. So you could correlate this Y leg of downside to this downside here in the indexes. So I do get some questions asking, how do I know that this is not some start of an impulsive move? So that's a really good question, and I can answer that with 2 answers. So first of all, if you look at the internal subdivisions of this impulsive move upwards, so over here, if you're starting the start of the impulse right here, this is not really anywhere like an impulse structure. So if you have a wave 1 up, 2 down, wave 3 up, wave 4 down, truncated wave 5, it just doesn't really fit the impulse structure and the impulse look. You'll never have this kind of sell off right here in an impulsive structure. This looks corrective to me. Another piece of evidence, so even if you do start up here, so even if you do start the impulse structure here, so that's around 427, and you have a wave 1 up, wave 2 down, and a wave 3 up, wave 3s will very rarely actually look like this. And the main piece of evidence I like to look at is here. So this gap down, this instant gap down, does not really happen in a wave 3. You never have gap downs really in wave 3. The downside will likely be caused by some like intraday sell-off, like such as this. But when you ever have a gap down, this typically indicates some B wave or an X wave. And in this case, it would be that B wave. So just in terms of the look of the move upwards so far, just from trading Elliott wave theory for so long, this does not look impulsive, and I can pretty much very confidently say that. So in terms of QQQ, it also further confirms. So if you start the impulse structure here, which you pretty much have to start it at the bottom of here, and you have the start here. So you have a 1, 2, 3 upwards. So that means you have a 1, 2, 3, 4, 5. And if you look at this wave 1 up, this is the clearest form of a 3-wave structure upwards. As you know, the wave 1 needs to subdivide into that 1, 2, 3, 4, 5 structure. So unless it's diagonal, of course, but this is not a diagonal. So over here you have that WXY structure or an ABC, and this would not be your wave 1. So that's the best piece of evidence I can give against this not being an impulsive structure. And if I did ever think this was an impulsive, I would definitely not be in puts at the moment. But because I'm so convinced that this is a corrective move to the upside, then I'm sticking to those puts, and I think we'll still be rewarded when this moves downwards in the future. So another piece of evidence I like to use to support this analysis is Apple. And this is a major player in the S&P 500 as well as the NASDAQ tech sector. And just to emphasize that over here in Apple, we are having that A, B, C correction. So individual stocks like Salesforce, Apple, Tesla, just a lot of examples, they need to correct and have another leg of downside. And that's your main indicator that the indexes also need to correct. So just in terms of dissecting this price action over here, we topped out for an X wave and then we moved downwards for an A wave. So possibly a 1, 2, 3, 4, 5, and then we have an ABC structure. And just in terms of retracing levels, Apple is actually looking good to go. It's at the 0.618 retracing level of the A wave, and that is your textbook stopping area for B waves. So nothing so far in terms of the stock looks out of the ordinary. It looks like it's ready for reversal, and that would definitely correlate to downside in the broader market indexes. So in terms of the retracement levels or the extensions of this ABC structure, we're right at that 1.618. So I do think that markets are right about to reverse just in terms of looking at individual stocks. And I don't really like to call specific dates on anything, but just based on all the analysis and the time confluence and just everything combined, we are bound to reverse probably tomorrow or Friday's trading day, but I would likely see some downside tomorrow. So in terms of Moderna, pretty much the same thing. We go down to the 15-minute time frame. So this is mRNA stock, and as you can see over here, we're having a very textbook wave 4. So we've been mentioning how we have this impulsive structure downward, so a wave 1, 2, 3, 4, 5, and that forms your wave 3 over here, and then we have a wave 4 coming up, and this probably forms some kind of ABC structure. And now we should be working on a wave 5 soon in the future, and that'll be a wave 5 of C. So as you can see, just any stock you can pick, most of them are just really looking to head downwards, and that would correlate strongly with that 6 to 8% drop in the indexes that I was talking about. And just another example, we'll look at Tesla. So for example, over here, I do believe I have Tesla right here. So as you know, Tesla has been going up pretty significantly over the past few trading days or so. And I do want to emphasize how this is also forming a WXY. So we have that ABC leg downwards that forms your W, and then we have a WXY forming your X wave. And as you can see, Tesla is pretty much exactly what SPY looks like. So the X wave has gone to these upward retracement levels of that W wave, just like in SPY, where we're pretty much above the 0.86 level, so right around the previous wave 5 topping area, just like in Tesla. And now we're expecting an ABC correction to the downside for that Y leg, and that would be a pretty significant drop in the stock. And in terms of individual subdivision and extensions, we're pretty much right at that 1.618 extension of this internal WXY structure, right at 867. So in terms of just this stock individually, it's looking like it's ready to reverse as well. I know there's earnings today. I didn't even check how the earnings did, but I'm very confident that that will lead to a sell-off, even if it's good or bad. That will have that ABC structure to the downside. So just as you can see, a lot of individual stock picks, they're looking to sell off in the future, and that's why I'm also confident about this leg of downside happening in the market indexes soon. Even for AMC, so AMC is a meme stock, and recently it has been actually following the markets. It goes down with the markets, goes up with the markets. It's no longer kind of inversing it, and this stock is ready to head downwards impulsively. So we have that A wave down, and this is a very clear A wave, very clear bearish impulse. So 1, 2, 3, 4, 5, and they work upwards for a B wave, so an A, B, C upwards. And then now we're looking to start that C wave of downside. So 1, 2, 3, 4, 5, that impulsive structure to the downside. And that would likely make sense because the markets are looking to shape downwards. Same with other individual stocks, and even meme stocks are looking to follow as well. And in terms of cryptocurrency, I actually do think that cryptos will be heading down along with these kind of meme stocks as well. I don't really like to focus on crypto too much. I'm mostly concerned about SPY and QQQ. But yeah, everything is really looking to have that other leg of downside, honestly, a more significant one than even this W wave downwards. So this created like a almost a 6% downwards move. So I'm expecting either an equivalent or an even worse move of downside. So 6 to 8%, possibly even more. And I'll of course keep updates when we start getting that downside move, likely tomorrow. So tomorrow or Friday trading day, I would say chances are we could see some evidence of that downside move tomorrow. So that would be Thursday. Yeah. So of course I'll keep updates in the Discord and let you know if anything changes. But so far nothing has changed about the broader term wave counts, as well as just the medium degree wave count. So this WXY structure, we have been expecting that. I didn't expect the Y wave to go up to these upper extensions, but it is possible, and it's totally normal according to wave theory. So nothing has changed so far, and I'm expecting that next leg of downside. So for those of you in puts, just stay put for a little bit longer. I think it's right about to reverse. So of course I'll keep updates and let you know if anything changes. So thank you so much for watching, and I'll see you in the next video.